Look at this chart. It is disgusting. We are sitting at 4 cents on the graph, staring at what looks like a bottomless pit. But while retail is capitulating and calling this token dead, something strange is happening on-chain. A whale just doubled their position in 24 hours, grabbing over 5% of the supply, right here at the lows. Why would anyone park millions into a token that has been bleeding for a year? Because while the price action is horrific, the fundamental reality of the graph has just completely shifted. We are looking at a falling wedge on the weekly time frame that is either going to print a massive reversal to 20 cents, or it is going to break down and send us into price discovery hell. I'm putting my money where my mouth is, but I have a very specific line in the sand. If we lose this level, I'm out. Let me show you why. Welcome back to Crypto Yield Pro. If you are new here, I don't do hype. I do data. And the data on the graph right now is painful. I have been covering GRT extensively this year. I released a video back on November 28th, establishing a load zone between 4 cents and 6 cents. Well, we are here. We are deep in it. The price is currently hovering around 4 cents, which is effectively all-time low territory. Support here is non-existent. We are relying on structural demand, not historical floors. Sentiment is at rock bottom. I check the comments, I check the forums. People are disgusted. And I get it. I have held a long-term bag since 2022. I took profits along the way, but seeing it round trip back to these levels is frustrating. However, as a trader, frustration is often a buy signal if the data backs it up. And there is something in the technicals that changes this picture. But first, you need to understand why that whale is buying. While the price bleeds, the protocol is actually expanding faster than ever. We have 3 major catalysts hitting right now in December 2025 that tell a different story than the chart. First, look at the Horizon upgrade. This is not just a patch, it is a total pivot. The graph has transformed from a single product network into a multi-service platform. Before, it was just subgraphs. Now, with Horizon, they have integrated real-time liquidation events and token APIs into one protocol. This matters because it creates multiple revenue streams for the token. Every new data service now generates fees and burns tokens. It creates a stronger economic value accrual that we simply did not have in the previous cycle. Second, the StableChain integration. You might have seen the news that Stable, the first USDT native layer 1, just went live. The graph is already live on it. This is an institutional-grade blockchain built specifically for stablecoins, and GRT is the indexing layer for it. If StableChain captures even a fraction of the high-volume settlement market, the graph captures the data queries. And finally, we have the interoperability play. The graph is officially becoming a cross-chain token using Chainlink's CCIP. This allows GRT to move seamlessly across Arbitrum, Base, and Solana. Speaking of Solana, the team is currently at the Solana Breakpoint Conference in Abu Dhabi right now, from December 11th to the 13th. Historically, these conferences can act as soft catalysts where partnerships are announced. So, we have the tech, we have the integration, and we have the whale accumulation. Now, let's look at the chart to see if we actually have a trade.
Pull up the weekly chart. This is the only time frame that matters for a setup this volatile. We have been in a brutal downtrend. The price is currently trading below the 10 and 21 weekly EMAs. Those are the blue lines. We are also below the 55 exponential moving average, the 100 exponential moving average, and the 200 simple moving average. When you are below everything, the trend is objectively bearish. There is no sugarcoating that. However, price is currently respecting a massive falling wedge, which I have marked with white dotted lines. This pattern has been forming since the local top in December 2024. We are currently touching the support line of this wedge for the 3rd major retest. Statistically, falling wedges are bullish reversal patterns. but they need volume to confirm. There are two indicators giving me hope here. First, look at the Heikinashi RSI below the price action. It's in extreme oversold territory. Historically, it has never been this low. It's pointing down, which means momentum is still weak, but when this snaps back, the reaction tends to be violent. Second, look at the volume profile on the left. The point of control, the price level with the most traded volume, is sitting up at 10 cents. That acts like a magnet. If we can reclaim the lower range, price will want to revert to the mean at 10 cents. I have anchored a Fibonacci retracement from the December 2024 high of 47 cents, down to the recent liquidation wick at 3 cents. The levels to watch are clear. The 236 fib is at 14 cents, and the 382 fib is at 20 cents. Here's exactly how I'm playing this. I treat my positions in two buckets. Bucket 1, long-term hold. I have bags from 2022. I'm underwater on the recent ads, but I'm not selling here. Selling at support is how you lose money in this game. I believe in the fundamental roadmap, so I'm holding this portion for now. Bucket 2, the short-term trade. I'm adding fresh capital right here in this load zone of 4 to 6 cents. I have a hard stop at a weekly close below the previous wick low. If we close a weekly candle below that red dashed line, this falling wedge is invalid. The pattern has failed, and I'm cutting this trade immediately. I'm not marrying the position. If we get the bounce, I'm scaling out aggressively to de-risk. Target 1 is 10 cents, the volume magnet. Target 2 is 14 cents. Target 3 is 20 cents. If we clear those, I'll leave a moon bag for 30 cents and 50 cents, but I'm taking the majority of profit at the first 3 targets. So, what is the risk to reward here? The bull case. The Horizon upgrade drives utility, the Solana conference brings hype, and the falling wedge plays out. We bounce from 4 cents back to 10 cents. That is a 150% move from here. The risk to reward is roughly 5 to 1 if you use a tight stop. The bear case. The market ignores the fundamentals. Bitcoin creates a lower low, and the graph loses the 3-cent support. In that scenario, we enter price discovery to the downside. It gets ugly. That is why the stop loss is non-negotiable. I'm disgusted by the price action, but I'm compelled by the math. The whale adding 5% of the supply at these levels suggests I'm not the only one seeing this asymmetry. The graph is at a decision point. It is either a generational entry at the bottom of a wedge, or it is a falling knife. I'm betting on the wedge, but I'm keeping my hand on the eject button. Remember, this is not financial advice. This is just what I'm doing with my own portfolio. If you want to track this setup in real time, I post daily updates in my Telegram group. It is free, and the link is in the pinned comment. I'll let you know the second I trim this position or if I get stopped out. And if you are looking for other infrastructure plays that are actually holding up better than GRT, check out this video on the screen right now where I break down another Layer 1 protocol. I will see you there.